Mic check.
Until I started learning about
Come here, bud.
Can you guys hear me?
I can hear you, boss.
Okay.
Oh, there we go.
Cool. Okay. 5 minutes until the open. This daily chart does not look inviting. Firstly, we're stuck inside a range, which is this range right here. And we have both bullish order blocks and bearish order blocks inside the range. So that's a typical feature of a delivery that's not trying to break out. So if you remember 2-3 weeks ago when I shared this chart initially, it just had the order block, buy side liquidity, sell side liquidity, and this level, and maybe this one as well. And I said that while this is bullish, I'm expecting choppy market, scalpers paradise or scalpers haven. That's essentially what's happening here. The difference is, if this was probably any other lower time frame, the ranges wouldn't be as wide. But because it's a daily chart, the ranges are wide enough for you to participate on lower time frame. At this moment, this order block here, can get rid of this. It's useless now. And I don't think we need this anymore. Bam, 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 bam. That was the start of the year. Yeah, don't need that anymore. At least not right now. Right now, what we need is evidence that this order block right here is doing what it should. If not, we're going for this high. I'm not a political person, but history has shown, if you've been around for the last time Trump was in power, stock market and gold thrive. They thrive. So for that reason, inherently, I believe the stock market for 2025 is going to have huge rallies, unless something out of the ordinary happens, right? Huge rallies are coming again in 2025. It's still the first month of the year, so no need to get crazy. I would like to buy below a monthly low and hold for maybe 2 or 3 months. I don't see that yet. So for now, I will go back to playing simplest of setups, which I shared some time ago. Submission range. There's more to the submission range, and I'm contemplating whether or not I want to get into that. I don't like the idea of talking about a whole lot of concepts to get persons confused. So I'm keeping what I'm sharing simple for now, at least. What I am going to probably, once I get some time and my clarity comes back, I'm going to try, right? So let me just say this now. I'm going to try and give you guys a very nice scalping methodology. And I'm probably going to blend a couple market maker model logics into it, since everybody knows that. And not to parrot ICT, just to help you understand some of the things that ICT taught that might still be evading persons. So when the time comes for that, you will know. As of right now, I am contemplating what side of the market I want to be a part of today. We still have the submission range high up here. Equilibrium has shown a whole lot of willingness to not push the market above. Heavy displacement through here. So what I could do is take these levels, superimpose them on a higher time frame, see what the higher time frame is suggesting. Had a big displacement at 7 p.m. last night for some reason. Not sure why. What did it do? Swept previous day's submission range low. Potentially previous day's low as well. Then we displaced, came back, equilibrium of the range, housed, reaccumulation, then it pumped. Nice little market maker model for market maker model funds. So now the most logical target would be this high. This high, not so much because its timing is irrelevant, but this high at the very least. So to get myself positioned in that, here's equities open. I want to see what happens right there. There. That's the key level I'm looking for. Now, for bullishness, ask yourself, what would you want to see here? Rejection or order block, or both. But this level is where you want support narratives to come in, and you can start entertaining that high getting taken. So that's what we're getting that now. So if you're keen enough to be paying attention to the little side conversations I've been having, then you know my participation will start in the next M1 candle. As of right now, I'm leaning on longs to take this high. It's a quick one, and it's going to be a quick one enough. That'll be nice. If I don't get a beautiful setup right here, then reading the narrative, low, lower low, take this high, breaker logic, higher. So I don't know what technical structure is going to print yet, but as long as this level is holding, I'm looking for a bullish setup. If I'm aggressive, I'm not aggressive today, I could immediately buy below the open price of this candle. So for simplicity, I'm going to reframe the logic here. I am going to say quite boldly, this is the start of a delivery. Quite boldly, it is not the start of any time cycles, okay? But to make trading this key level easier to read, I am reframing this delivery like this. If we close below here and take that high, I am going to entertain longs. My bias is already bullish. What I don't have is structure to buy from or technicals. So that's what I'm looking for now. PS forewarning. My daughter is being very miserable this morning, so she might make guest appearances. So in the event that I have to speak to her, please utilize key level and the logic here to potentially find an entry, maybe if I missed, so you don't have to not be a part of it. But at this moment, the trade idea looks like this. Quite simple. Whether you're conservative or aggressive, that's what the trade idea looks like. Let me see what's up with my daughter. But yeah, one of those daddy-daughter days. Hopefully you got the entry. Looking for this to be a quick one because I can't be around PC with daddy-daughter day. All right, so roughly about the first 20 points. M5, no idea what M5 looks like, but a confluence on an M5 here would make this nicer. I don't know what my other chart looks like, so I can't randomly share it. So this is the M5 looking heavy. Get back above that level. And the M5 high is going to be right here. And that's all I will need from the M5 chart. There we go. So now on M1, you're waiting for a displacement through here, not a wick of this high, not just a close above the high, like a displacement through that high. If it's looking like this, we may be too early. No problem. Trade management and, well, not necessarily risk management. Trade management comes into play here. Displacement and breakaway gaps here is ideal. Started a new M5 candle. Typically, this is where you see the most unfavorable price action when you haven't gotten the confirmation yet. So as we watch this, please keep that in mind. If you don't feel comfortable entering yet, chill. This is what I mean when I say the most unfriendly price action. First minute of the M5 candle typically shows you this type of price action if you are early in a move. So that's a stop out for me, and I don't mind. What I'm going to be looking for is reclaiming that level if we're going to go higher. While it's down here, I'm not going to try to think about any early entries. Reclaiming the level. Get back above here, and I participate. One second. One moment, please.
Nobody doing in-flight entertainment today.
My bad. Where were we? Okay, so this is running lower, faster than expected. Didn't expect that type of push. No worries, no worries. I'll just wait. Still very early. Let me just give me a second to get back into the group. What's going on? Oh. A little bit out of it this morning, admittedly.
Those daddy-daughter days get more fun as they get older, especially teenage.
I think she, one of those times when she used her iPad all night and then it just died when she woke up. It's 9:39, which means Bam, 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 bam. Okay. Okay. Sorry about that again. Way too early for this type of sell-off. But that's too far gone. Mm. Just do some quick calculations in my head. VIX expiry. VIX expiry. I'm not sure, but what I do remember is that if VIX is expiring, there should be an abundance of selling, and if VIX is going down, they should be going up. So unless the VIX is pumping higher, yeah, not really pumping higher, just a little bit higher. Okay, finally, whatever this is feels like it's ending. I want to do some calculations on the chart, but I know that if I do, it's going to have a whole lot of backlash. So let's do this the easy way. Most times when I'm looking to trade inside the 9 o'clock candle, I look at the delivery that starts at 9:12 a.m. In this instance, 9:12 was above here, so no problem. We had one-sided delivery, didn't run the high, which means it's reaching for imbalances. Reach down, imbalance is swept. Beautiful. Range is made efficient. We left the range and we took it slow. Ideally, I'd have wanted to see them trade through the high of the range. Now that this is here, we are quite far away from the 9:12 open price. If I started looking at this long setup a little bit too early, and we traded through submission range low again, it means that all of this is an expansion or a stop run. If it is a stop run, first FEG in a stop run leg, all is going to be your breakaway gap. Second one is where retracements are permitted. So I actually want to switch this. Retracing here is fine. Reckon this shows direction. So I'm going to anticipate that this happens while we're on the call. We write this, get above, we make a new daily high. If not, the retracement objective is going to be inside this FEG. I don't care about this one at all. So we had this didn't consecutive, but this didn't close below here. So not really an expansion from 60 something. There's a 40 point, potentially 50 point setup inside here. I don't have enough narrative to frame a viable support inside here. So I'm going to go to unconventional means. I'm going to try to get my 10 points back, plus more. Should this wick inside here. Bam, 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 bam. $9.48 low. Ideally, below the 9.48 open would be what I want. But if it's framing support like this, then that 9.48 candle could just run and be explosive instead of giving you the entry fractal. So then the narrative makes sense, but then there's no entry to trade. So I want this supposed support structure, and then wicks into here, and then it just goes. 50 points is my goal. If I only get the low end of this, well, it's 40 points from the middle. So I might not get 15 in one push. So I might have to build a position. Screaming not ideal, but it is what it is. It is what it is, what it is. This is what I didn't want. I didn't want him to run ahead of that. But let me wait and see.
So Kish, in a situation where like you're watching not only the breakaway gap, but the retracement objective FEG, like what does your decision tree look like when it's like we fill the retracement objective FEG, but then we just tag into the bag? Just still narrative lower, correct?
Yeah. If it can't break back, then the direction is still lower.
Yep.
But again, now I have no trade because we're at the objective. Selling this looks like it makes sense, but there's no rules around selling that. That's just selling and hoping.
So logic would be aggressively managing that long.
You got along?
Yes, sir. Of course. Have you seen my teacher?
I mean, in hindsight, on a normal day, I'd be long when this wicks this.
We had a nice rejection at the hourly AMR or your dark pool. I have a hard time saying dark pool.
AMR is fine. AMR is fine.
I once heard it as algo memory, so I just algo memory range.
Remember it is.
And now we're about to close above nested five minutes AMR. So
yeah, I may have just missed the long and it's gone. But like I mentioned earlier, reclaiming the level here is a perfectly fine setup. If I get context that this is going higher.
yeah, I've got a small runner just in lieu of it not retracing beforehand.
Yeah. On the bright side, nothing to hurt you or blow your account. One small loss. I missed the long entry. I can live with that. Rejected the breakaway gap. Traded blow up candle. Instinctively, I want to sell the next candle. That's a rule. So selling above the open price of this candle. That's my second trade. Put my stop above the breakaway gap. A little clumsy this morning.
Funny you should mention your daughter's iPad because my daughter's died yesterday and it was an emotional day.
Yeah. Yeah.
I'm gonna buy a new iPad.
Fortunately, my eldest daughter is at school, so her iPad is here. So when you have YouTube Kids on them both, you just switch the device and they switch profiles. All right. Now, pretty decent for the short. Should be about 50 points. Prop firm folks might not have the luxury of managing like this because you have to stay out of that drawdown window.
You didn't scalp the buy on the last candle?
Which one? Here?
No. Literally the last candle.
This one?
Yeah, when we swept that low for a buy, I'm saying.
Yeah, I thought about it, but I didn't.
Felt greedy, but it made sense.
Two thoughts in my mind right now. The 10 a.m. H1 candle sweeping this low, and then it goes, and that could potentially give me the long that I want. Something inside here does not look right. Oh, there it is. I was looking at this big wick and then the body through. And then this candle was trying to stay above here. That's not good. That's not bearish. 30 seconds. If this is not trying to close below where the entry is framed on this, and this M1 candle, then that's not very good for this, and I might cut it. Let me just put a visual on for what I mean. From this start of this wick to this body here, that 50% should not act as support in bearish deliveries. So now, first rule, trail stop, because the delivery is not showing that it's immediate. You don't want to get carried away and compound losses. Now it's showing willingness to get below. Okay. All right. All right, so 50 points is 50 points.
That's the millennia coin.
I was really hoping that I'd walk you through the trade management and all, but 50 points is 50 points. So you should be up 40 for the day if you took the loss with me, or round about that.
Get used to it for the next 5 years.
I am going to eyeball, like I said, the low of the previous H1 candle, partials and break even. And I want to keep something if two conditions are met. My partial is going to be kept at break even under two conditions. Condition number one, we stay below this low. Condition number two, it's not yet 10 o'clock. So for the next 6 minutes, I'm heavily out of the position, heavily out. But I have a runner on for fun. That runner is going to be what facilitates the idea of H1 potentially sweeping this and going higher. If not, it's just going to be a really good entry for a potential 100 point drop on a partial. But I want to see the H1 at 10 sweep that previous H1. We're already below it. So whatever low gets printed inside here, it would be nice. You don't have to be greedy but this is just me and my rules. I would like to see right here sweeping a low. If those two conditions are met, conditions not being met, just cut it and relax. Don't give it back. So as this is retracing, since I want to see it down here at this time, I'm thinking a rejection. Just reject highs, reject highs. Let me tidy up this a little bit. There's something inside here I'm trying to, there it is. Not rejecting highs. No need to be a stickler for perfection. Hey, what's up? What's up? In out 5 minutes. Yeah, how much did you put on? No, that was me. That was probably the combined selling pressure from what 79 persons on the call. But yeah, even if I'm going to get that sweep, my position is really, really small. I want to trail my stop all the way down to this high after this candle closes, provided we don't take that high. So 20 seconds. If it takes that high, then I'm just done. But if we close, okay, that's it. Manually closing here. Not liking the price action. Because everyone's stop loss that. Tyler, you went long?
Yeah.
So you play. What can I say? What can I say? Why am I even surprised?
Break even already though. That was quick and too aggressive.
Yeah. Fast moves generally get retracement, but the logic of the hourly sweeping the previous hourly before it pushes is very attractive. So even though this is doing this, I'm still not thinking it's going to pump. But let's see. Let's take this off. This is what I wanted to do when it's approaching here. Probably could have been a little bit more lenient, but why leave money on the table? Let's see. No news today, so should be fine.
Hello, Kish.
Hey,
Yeah, hope you're good. Can I ask a question, please?
definitely.
With respect to this range, so if you move to the left a bit, if I could ask. So if, for instance, I'm tracking a range of price, and so once we break below the low, let's say that your blue line, and I'm expecting that, okay, this bag price should send, so price should return here and send it down. But I'm also concerned about the fact that this portion, like as we are going down, is not efficient. So what do I do in terms of, do I, in this instance, for example, it was nice because I had this problem yesterday. So do I wait for the shot like you did, or buy it back towards this place? So in real life, not saying you do it, it was nice, but yesterday, I think around the same time, something like this presented itself. And I was in real time confused about the long first. I think the short came first, and I was also concerned about the fact that there was still inefficient price above me and above my stop loss. So in this instance, of course, maybe with you it was nice, and I felt more confident to maybe go with this shot. But I don't know if you get my question. It's like
I
putting
get
my
your
stop
question. I get
above.
your question.
Okay.
I do. There are a couple things that I have to address in order to answer your question. Okay. Here's the first thing. Pattern trading is the root of a lot of misunderstanding. Okay. There's nothing wrong with memorizing a pattern, nothing wrong with understanding that the dynamics of a pattern, nothing wrong with that. Okay. But as an ICT trader, right? I was baptized in ICT. So ICT stressed in the beginning that narrative is greater than framework. So for your own psychological development, as you get more comfortable looking for patterns in structure, you have to tell yourself that patterns are the framework, okay? The narrative is if the market is bullish or bearish. And I'll explain a little bit more. Like I said, I have to touch on those things in order to appropriately answer your question. Once you're comfortable with the fact that narrative is greater than framework, you will develop a level of understanding where you can say, this should happen under these circumstances. Okay? So, first thing, or not the first thing, the second thing is, when you're trying to decide what circumstances should be ideal for a given framework or pattern, the most important thing is how you determine or find your key level. Key level plays a big part in if a fractal should work or not. For example, if order flow is bullish and you're at a daily high, the idea that you can see a bullish order block or down candles form and then the lows of those down candles staying intact is more likely to play out than the market falling and then you start form fitting that a down candle should work. Let me use this for example. We tried to go long here. We got a stop out and the market plunged lower. Realistically, it is not right or sensible to try to buy after a big move down like this. Okay? But in this fractal, in this framework, under the narrative that the submission range high has not yet been taken, a bullish narrative with a potential bullish framework inside a bearish drop makes sense. So I can automatically start looking at this and saying, okay, if we just had a big drop down, what tells me that I can go long? First thing is, was the objective met? You can't see the market dropping and the sell side liquidity is still down here and you're trying to buy or trying to frame something for a buy or try to frame buying a retracement. It would be better to just short the retracement. Sorry. Okay, so that's the first thing. The second thing is, in this environment, we were looking at submission range high and low, or we know what should happen there. The expansions, higher or low, take place here, unless the 50% is showing up for work. We displaced through here. What did I do? I went and I looked for the displacement leg. Where is the price swing that broke through that low? If you want to call it the stop run leg, if you want to call it whatever, just be able to find the expansion that trades through the low of your sell side liquidity in this case. Once you have that, the first signature that you look for, the first signature, it's not the FEGs. The first signature you look for is, are we getting down candles continuing to close below previous lows? This is closing below, you're not trying to buy this. This is closing below. You're not trying to buy this. This didn't close low. You're open to the idea that something bullish can print. We close lower. You're not trying to buy this. It doesn't matter how beautiful this look. Buying the low of this candle. No. This is now not closing below this low. Now you're open to the idea. So you start off with the narrative that says, if this is retracing higher, this is how the structure should look. Because it's showing you it's not expanding. So if it's not expanding lower, it's either consolidating or going higher. If it's consolidating, wicks and no body's being committed higher. Easy peasy. If it's going higher, bodies are closing higher. So we have last down candle, push up, long idea. Now, for whatever reason, I didn't get this trade. No problem. I now have 2 consecutive up close candles at a low that I believe is going to hold. So now you start framing what are bullish signatures inside this bullish retracement, because you have order flow. So now you need structure. You have the narrative that this is retracing. Now you need structure. Once you have order flow, next thing that you need is, where is the drawn liquidity? This market is likely to be retracing since it's not bearish. Where is it going to draw to? The importance of that is, I don't know if it's going to happen in one big candle, and I'm going to try to force a narrative and buy after the retracement is done. So once we start getting the commitment, where is the target? This is the start of the expansion. The first FEG in every expansion, consider it a breakaway gap. Just consider it. I'm not going to tell you that there's a rule. I'm not going to tell you that I have any secret information about it. Statistics have shown me that the first FEG in a run on liquidity generally behaves like a breakaway gap. What does that mean? If we are heavy, you don't want bodies above that 50% or bodies above that FEG. The second FEG in the stop punt leg always caters to retracement. Everything else is for the ICT fanboys. And I say that respectfully. Everything after the first and the second FEG is for ICT fanboys. This one for retracement, this one for context on direction. Market trades lower, immediate rebalance. Typically, you want to see an immediate rebalance under redistribution conditions, but this is not far from that. If you are an apt market maker logic student, then you know one-sided direction, what's it called again? Smart money reversal, low risk buy, reaccumulation, or whatever the next thing is called is coming next. This is a narrative for how to frame it. If you remember in real time, I was saying there's nothing here for me to trade. So I'm just going back to classic, like basic structure stuff. Like basic. Candle high, candle low. Efficiency between there. One big body. This passed through. So this is not a classic FEG. This is a redelivered rebalance. Not the IRB, redelivered rebalance. Why? Because the bodies came before the wick. If it was a wick first and then the body, then it would be IRB. But that would mean, hey, okay. Yeah, sorry about that. So if the wick came first, then that would have been an IRB and it would have been easy to frame. In this case, it's not. And I'm not using this and this to frame this. I'm using this down candles high and this down candles low. And inside here is where I wanted to buy. Talked about that. You run higher. What are you seeing when it gets to the retracement objective? We picked this FEG in advance. It got there. It's not trying to close above. Okay. We had a bearish expansion followed by a retracement. Retracement got to the objective and it's not showing commitment to go higher, because this is what commitment to go higher looks like. All you need at this point is a bearish framework. You don't need a bearish narrative because we're in a bearish expansion. The bullish retracement is done. So the framework, the narrative is already there. Bearish expansion, bullish framework, bullish retracement that didn't break structure, continuation setups. Something inside here is going to print. It could be whatever for you. It could be up candle, trade through the low, short, which is what I did. Simple. Market started to play around inside here. Okay, I don't need to get emotional. Frame the rules. So if ever you're looking at something like this and you're trying to decide, do I go long here from here? The first thing I would say that you have to see on the chart for your understanding is that setup worth my time? I'm not going to buy for 12 points, 15 points. As fun as that is, I don't want that. I like the idea of runners. So if you can see that you can frame a 50-point retracement, then go for it. Just target. It's better to do it like this. 50 points away from this high gives you your ideal entry. Once you have your ideal entry, then you can start looking at the ideal entry is not yet at the most logical entry point. And then you allow yourself to get in not here or not up here, but wait for that. Pulls back up into the FEG, you stop hoping. If you got this long, you do not hope this gets violated. If this, then that only works on the rules-based condition. This is a breakaway gap. If it gets broken, then I know my direction. It's not, I'm long here. This is the FEG for retracement. This is a breakaway gap. I'm going to add here, and no, because you miss the entire narrative in that sense. So what I would love for you to do is send me a picture of the one that didn't work, or you could go over the one that didn't work under the conditions. How many FEGs were in the stop point leg? Where was the second FEG? What happened in the second FEG? Did we have body closure? Go through those things first and look if the market was telling you something that you just failed to see, and that happens. I mean, this is a good time for me to nudge someone else. I don't think it was inside there. Somebody wanted to go long in here. I believe it was in here, somewhere in here, but he knows who he is. It's the same reason why I said I didn't like your long inside here, because we had an expansion. We had the FEGs. Market was coming. I can't see the range here, and I don't want to put on indicators to start World War III, but it's the same narrative. If the FEG in the stop point leg or the FEG in that leg is saying that, you know, this is what we're allowing, and if it's only one FEGs, that's even worse. If you just pay attention how many FEGs are there, if you have one FEG at the start, then another one up here, another one should hold price if it's bullish. Any type of willingness to put bodies down here, be okay missing any wild runs higher. Expect them to trade through, get down there. So now you start looking, why would they want to go down there? Inefficiencies, range low, whatever. That thought process helps you to understand a lot more why these things are supposed to happen. This is the short that I wanted to be a part of. I didn't come into the day with a bearish bias. I came into the day just reading whatever price was saying. Untapped highs, key level, something is going to print at that key level, ideally an expansion, right? So you wanted to see them hit here, order block, all that good stuff, go. There's no expansion here in this leg. So if there's no expansion, you automatically know that if I have an A+ setup with the FEGs and there is none here, I know how I'm supposed to frame risk around those trades. I don't have to get lucky on a potential big trade or get cooked on a potential on a bad big trade. You start seeing, how should I frame this risk? You start building positions versus going in at once. It failed. Unfazed. It drops. Okay, we start reading. If this is now bullish, we just had a 10 o'clock candle, H1, trading below the 9 o'clock candle. So what does that tell you? It tells you that the first key level is going to be the 9 o'clock low. If the 9 o'clock low is the key level, how can I read this? Same way we did here. It means first FEG is your breakaway gap. Second FEG should hold retracements. Depending on where this fractal prints in relation to your drawn liquidity, you can know when you can sell here and allow for the 2 or 3 or 4 points against you and not care, versus when I better not touch this. But saying it alone won't help you to understand it. You have to listen to the definitions, see them on your own, and then make decisions, and you'll start to realize why this works versus why this didn't. If this is bullish and this is going to be the drawn liquidity, this big glorious market maker model, you know what you want to expect here. And you'll also start to know when you can trust FEGs on this side of the market. In this case, there was none. But you can start, just use the same things that we just talked about. This is closing above the FEG. Well, at the moment, it's closing above it. What's that telling you? There's willingness to pair orders above the retracement. So that means the retracement target is not just inside here. This market is likely to go higher. How much higher? I don't know. But what I do know is if it's going through here, this is what sets the stage for this. So I might not get this entry to here and be able to laugh about it. But if we get through here, I know what to look for. That's pretty much it. Those are the simple things, the simple rules-based things. Like I could pull up any low that was ran. And let's just use what's on the chart in the interest of time. When you have kids and they get quiet, you better go check on them, right? So if we take a look at these lows inside here, right? Just the ones that we have. This, I'm not using this because this didn't run that low, right? Just for clarity. And I'm not using this because there's no FEGs here. So it's pointless to explain this. This as a FEG. How many FEGs are there? 1. You start counting from the top since it's a run lower. If the first FEGs that print are breakaway gaps, this is telling you a story. What's the story? Untap lows inside here need to get traded to. Bam, untap lows get traded to. None of these pushes lower have FEGs in them. None of them. So that what does that mean? We're either consolidating here or time is going to give you a big push that breaks all of that, which is what we tried to play here. It didn't work out. We don't go buying. No. Rules. Displaced, same idea. Just find the first FEG. Find the first FEG. That's it. If you look at all the expansions, look at this one. One big push through the low. How many FEGs are there? 1. What do you look for? You grab that low, go all the way down here. That's your framework. In this case, your framework is also giving you a key level. Why is that a key level? Because it's a breakaway gap. 50% of the breakaway gap generally don't get bodies above it. If it's wicking here, just sell that. That's not what we did because we were talking about. Just sell that. What are you going to target when you sell? If it's an expansion from a breakaway gap, internal to external, take this low. We already expected that low. So trade it through, done. This is when you close above here, buy below the open of the next candle. It just runs. It looks magical. Somebody asked me to explain the rationale behind a trade. These are the things I'm using blended with time. Time theory, what should happen? That's what I use to trade without a stop loss. I'm not going short here and then holding through all of that. I'm going short here or I'm going long here, then it's running and I'm done. You have to, long-winded response. My apologies.
Those are the best ones.
TCM rant.
Yeah.
Thank you so very much.
My pleasure. Over the last 2 months, I've just found out that there's a whole lot of persons who they miss these little things. Like, we get taught too many things in hindsight after the fact with a couple of rules set, and they work every time the mentor uses them. But then when the student tries to use them, they don't work. And there's never any explanation besides, you know what people say. Explain it away. This is what we actually need. An idea and understanding, real-time application, rules around why it should work and why it should not. That's it. Here we have two breakaway gaps overlapping. We knew this retracement had a higher target, but we did not know where it was. I openly said, I don't know where this is retracing for. But we know if it closes above, it's going to reach above. It closes above here, we know we can buy this. But we bought this, it's trading up. We have old breakaway gap. We have all of this inside here. These are, I don't think there's a word for them, but these are the levels that you don't want to see. Let me not say you don't want to see. These are the levels that tell you direction. Not everything in the market is going to be about entries. Some things just tell you that, hey, the direction of the market right now is higher or lower, and then you can find your own entries. So this is. You can put this from the candle that closes above. Right there. Just that wick. That wick. This is the candle that closed above 50% of the breakaway gap. So I was saying that, we could buy the open of this candle. Expands close to the high. That right there is a balanced price range. This right here tells you direction. What are we trying to do when it gets back there? Reject it. So right now in this candle or this time period, it's not heavy. Okay, it's not heavy. Let's say it's bullish. What is it going to do now that it's bullish? Make a new high. So the moment candles start to print after here, you have mile markers. If it starts to trade above this high, that means we're going for. If it's just going back above this high and wicking that level, that means it's not ready to move. All of this accumulated liquidity here can be run and then it moves again. And then it looks like a classic market maker model. If it wicks here, rejects and comes back here, fails to smash the bag, what does that mean? It's not ready to move yet. What time is it? Those are the little things. It's not just, this is the entry, this is the support. No. But I'd love to continue ranting on about this. But I think it's enough to get you looking where you should. Plus, I need to make sure that
goes in the top 5.
Huh?
This one goes in the top 5.
That's a compliment.
Oh, definitely.
But yeah, this has a whole lot of narrative training. The whole point of January for me was to help you guys frame narrative a little bit better, because the entry fractals you already know. I don't need to tell anybody what an order block with a rejection block, how to get an entry. I don't need to do that anymore. But how to blend them in line with a direction, so you can actually make money and not just analyze. That's what we need. And that's the point of these live calls. I don't usually do live calls trading publicly. This was all done inside the WAP. But as I'm slowly getting a little bit tired, I just want to show all the persons who have been following me for some time that we can trade like this with what we know every day under rules. Some days it's going to be beautiful and easy. You've seen that. Some days it's going to be not. Some days we're going to rush it. Some days we're going to not. You can do this. You can do this. Right? Everything, nothing I did here on the call was like, why that? Why no? What kind of no? Everything here that I did, you could see and follow along. Okay, pick that low because of that. Maybe you didn't know why I picked this. FEGs know you understand why I picked them. You could do this. You could do this. And that's why when I'm trading, you don't hear me say, all right, guys, this is my model, blah, 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 blah. No. My strength is I can read what we should. I don't know. I didn't code this. I can read what is likely to happen under certain conditions. And that's what I put money on. Sometimes, there's inauguration. Sometimes there's stuff outside of technicals and the market just does not behave. You don't tilt. You do not tilt. You guys can relate to this. Having a good Monday, a good Tuesday, a good Wednesday, a good Thursday. Friday, you do some dumb stuff. You give it all the profit back. Or you wake up, you take 5, 6, 7 trades, all of them beautiful. Towards the end of the day, you take one trade and it's a loss. And you don't want to walk away with one loss. With that win rate, you just keep pushing and pushing and pushing. Even if you're going to do that, there are rules. And hopefully I have more time that I can, show more stuff like that. Not just trades that beautiful, trades that don't work out and we manage them properly, getting it back, keeping it, compounding. I want at least one of these calls to have a lot of scalings so you guys can appreciate that aspect of trading a little bit more. But for now, we take them as we get them, right? But don't want this to be too long-winded. So with that being said, I'll end here. I hope you guys enjoyed it. I hope you guys didn't just spectate and you made some money too. And you're not going to give it back. But enjoy the rest of your day, guys. It's taken a lot to be this happy this morning, but we'll have that conversation.
Oh, thanks a lot, man. This was wonderful, Kish.
Yeah, thanks, Kish.
Amen
Good.
to you, big man.
Hey,
R3.
you in a while.
Hey, man.
Wait, I messaged you Merry Christmas. You didn't even respond. Don't even pretend like you like me, Kish. I'm hurt.
Bro, don't do me like that, man.
I'm hurt.
But I'm gonna check Telegram. But yeah, enjoy the rest of your day, guys. I'll be
Kish.
on social media today because I'll just be here with my daughters. So I have time to check messages.
Did you have another child?
I'll talk to you sometime about that.
A couple
Oh
more.
gosh.
Yeah.
All
Yeah.
right.
Enjoy the rest of your day, guys. See you in the chat.
Thanks,
Catch you in a
Kish.
bit, man. Mutual respect. Stay blessed.
Lots of love and mutual respect.
Respect, big man.
Thank you. Bye-bye.